In Greater Vancouver, we are currently sitting at 4,900 active listings for sale as of the end of December. This is the lowest count on record ever. In other words, we're starting off the new year with a record low inventory base. It will take many months, likely longer, to get inventory to healthy levels, let alone an oversupply. So this is probably not what you want to hear if you are a prospective home buyer. Detached house prices are now up 22% year over year, and condo prices are starting to catch up, rising 13%. It would not surprise me to see condos outperform the detached houses in the year ahead. We saw this exact same scenario play out in 2016, 2017. Detached house prices peaked in 2016 after a major run-up in prices, and then the following year, condos ripped more than 20% as buyers sought greener pastures. I'm not saying that this is inevitable in 2022, but I think the probabilities are high that the condos will outperform. I mean, detached prices in the Fraser Valley are now up 39% over the past 12 months. How much higher are we expecting them to go? The only thing that could really spoil the party here, and it should be on everyone's radar, is the withdrawal of liquidity. Less government spending and tighter monetary policy will be a key theme in 2022. The Bank of Canada is poised to sneak in a few rate hikes this year. How many remains the big question. Remember, Canada's debt to GDP is now at 370%. Interest rates cannot normalize without detonating the economy. Rate hike forecasts are far too optimistic in my opinion. The key figure is mortgage rates. If they creep back above 3% and hold, it will no doubt slow the housing market, particularly in highly leveraged cities such as Vancouver and Toronto. Until that happens, the runway is clear ahead for takeoff. Inventory sits at record lows and buyer appetite remains strong, coming off record sales volume in 2021. So let's dive in to the month that was December 2021 and see what's ahead of us in the new year. The detached house sales fell 28.5% year over year in December. Keep in mind, we're comparing this to a relatively high base effect from last year. Detached house sales are running right along their 20-year average actually at the moment. Meanwhile, new listings also fell by 24% last year. This is why we always prefer to look at the months of inventory for sale, which helps us filter through the noise from the base effects. This will be particularly important moving forward as future comparisons will be done against all-time record highs from last year. Months of inventory for single-family houses currently sits at 2.5. However, now let's unpack this a little further. Anecdotally, everyone knows that demand for entry-level houses is red hot. People want more space and house prices are drifting out of reach for many. There's an affordability problem and everyone is trying to squeeze in. This is pushing the entry-level price for a house much higher. The benchmark price, which measures the price of a typical home, now sits at $1,910,200. That's up 22% from last year. And so if we focus on the typical home, we can see that's where the supply constraints are the tightest. If you're looking for a single family house under $2 million in Greater Vancouver, there is currently 0.9 months of inventory for sale. This is an all-time low. The market gets much less competitive when you get north of 3 million, as there's simply not enough qualified buyers in this price range. The months of inventory for single family houses north of 3 million sits at 8.2. Again, a totally different market. The detached housing remains plagued by an acute shortage of affordable houses for sale, and the prices just won't adjust until the months of inventory moves higher. The number of qualified buyers begins to shrink when prices move north of 2 million. So this could be a problem for the market moving forward, which is why I think price growth could be constrained this year in this category. Condos. The condo sales were essentially flat from last year's all-time highs. Demand remains strong, and the number of listings actually fell by 14%. But it still remains elevated on a historical basis. In other words, we have a high number of sales and a high number of new listings. What does this mean? Again, let's turn our attention to months of inventory for a better read. Months of inventory for sale has plunged to 1.5%. It hasn't been this low since August of 2017. Remember what I was saying about 2016, 2017? If you're looking for a condo under 1 million, then months of inventory, it falls even further down to 1.1. The name of the game is affordability. Everyone is struggling with housing affordability, and so most of the demand is concentrated in the entry levels. There's ample supply of luxury condos for sale. If you're looking for a condo north of 1.5 million, the months of inventory for sale climbs to 8. Unlike the 2016 bull market, the luxury bid is just not there right now. The latest housing bull market has been driven by locals competing against each other for entry-level product. The benchmark price of a condo is up 13% and now sits at $761,800. It looks poised to move higher this year. I believe condos could outperform detached houses here in 2022. So let's watch what happens ahead in 2022. And if you haven't already, look back and see what my market predictions, my top 5 predictions were for 2022 in my last video from last week. And otherwise, I will see you next time. So Josh Kepke with McDonald Realty, vancouverrealestatetoday.ca. And don't forget to subscribe for full disclosure. That's my weekly pro tip series and other videos like this. If you enjoyed what you saw, hit the like button, subscribe, and don't forget to follow me on Instagram as well. Bye for now.